Right, it's time for some business news now with Stephen Carroll, our business editor. Good morning, Stephen.
Hello, Catherine.
Now, I have to say, I'm not normally that interested in technology, video games, or any of that kind of thing, but this story sounds quite fun. Nintendo is getting a boost from Pokémon fever. This is that kind of crazy, very original new game, right?
Yeah, well, it's a world of tiny monsters. It existed for about 20 years, but it started, of course, as a game on the Nintendo Game Boy, but now it's made the jump to mobile with extreme success, it would seem. Certainly if you're looking at Nintendo's share price today, which is up by more than 20% in Tokyo after the launch of the mobile version, Pokémon Go it's called. Nintendo launched the game in Australia, New Zealand and the United States last week. It quickly shot to the top of the download charts on the App Store and on the equivalent Android download stores as well. Now, the augmented reality game allows users to find Pokemon on their mobile screens as if they were in the real world. Until recently, Nintendo had been reluctant to transfer its popular games like Super Mario Bros., for example, onto mobile. It only launched its first mobile game in March of this year, but the results do seem to be in the share price today. Company's value has jumped by some $7 billion since Friday. Shares just before the close, they're up by almost 23% in Nintendo. So obviously investors very impressed with the success so far of Pokemon Go.
It's pretty unbelievable, isn't it? And it's just such an original thing, isn't it? And apparently in the United States, it's almost stopped working because so many people are trying to play it.
Exactly, and the huge demand expected to be replicated elsewhere in the world as well. We know people are looking for all sorts of ways to get around the restrictions that it's only available at the moment in limited number of markets. So the success of Pokemon Go to continue. That's bearing out to do on the Asian markets today as well. The Nikkei in Tokyo up by around 4% the close there, helped not only by Nintendo but also by the success of Shinzo Abe's party in those weekend elections in Japan. Investors seeing that as a sign of more stimulus to come in Japan. So that's giving investors some cause for cheer. And we're seeing gains as well across the rest of the Asian markets too, as you can see there.
All right, Nintendo happy, Shinzo Abe happy. Is George Osborne going to be happy when he visits Wall Street later on today, Britain's finance minister?
He's certainly going to pretend to be. George Osborne meeting some of the biggest investors in New York in an effort to convince them to stick with Britain after the country voted to leave the European Union. In an article for the Wall Street Journal, the finance minister said he wants to strengthen trade ties with the United States, Mexico and Canada. He wrote that Britain wants more finance in London, not less. This is a quote from the article. We now set to build a more outward-looking, global-facing Britain with stronger links with its friends and allies around the world. This trip to the United States to be followed by similar planned visits to Asia as well. That charm offensive set to continue.
All right, we'll have to wait and see how he gets on over there. Speaking of Asia, in China, trade ministers from the G20 group of countries, they're getting together to talk about boosting global growth.
That's right, and they're hoping to do so with more trade. But the ministers admitted that protectionism is on the rise, with trade restrictions reaching their highest levels since 2009. The ministers want trade to remain an engine for growth. The G20 represents 85% of global trade. Let's listen to the Chinese trade minister speaking as the meeting wrapped up in Shanghai.
At this meeting, ministers all agreed to enhance the multilateral trading system, reiterated their opposition to protectionism, and agreed to extend the promise of avoiding or reducing protectionist measures to the end of 2018.
Some more of the day's business headlines for you now. There are more than €8 billion worth of deals on the table as the first day of the Farnborough Air Show gets underway in Britain. Among them, Boeing expected to book new orders from Spain's Air Europa and from German tour operator TUI, according to reports. Farnborough is the biggest event of the year for the world's aerospace industry. In 2014, the total deals announced at Farnborough topped €180 billion. Wall Street analysts have slashed their profit forecasts for the major American banks, which begin reporting results this week. Morgan Stanley expects fall of 27% in earnings per share for Bank of America and 23% for Citigroup. The downgrades come as it's now seen as less likely that the Federal Reserve will raise interest rates in its coming meetings. And the Japanese messaging app Line is on track to raise as much as $1.3 billion in its stock market debut. It set its opening price at the top of the range at 3,300 yen, or just under €30. Line has 218 million monthly users and is owned by South Korea's Naver.
It's got some pretty funky graphics going on there as well.
Yeah.
Very intriguing. Right, let's move on to Cuba next. Now, people there suffering from somewhat of an energy crisis, and the authorities are calling on people to use some power-saving measures in their daily lives, in their businesses.
Cuba has long since relied on Venezuela as its main source of oil, but difficulties in supply from there has led to warnings of blackouts on the island, as Radaba Abbas now reports.
Cuba's President Raúl Castro arrived in Parliament among growing concerns over the country's energy crisis. The government is expected to lay out reforms to boost the economy. A recent drop in exports mean Cubans are having to conserve energy by adopting power and fuel-saving measures. As public offices cut back on air conditioning and bus services are reduced, some people have had to scale down their working hours. Government cars have also cut their fuel allowance by up to 50%. But that's proving difficult for those whose jobs depend on such resources.
There's been a problem with gasoline for some time now. So many petrol stations don't have any or just close early due to the lack of supply.
Last year, Cuba formally re-established diplomatic relations with the US following decades of Cold War tension. Many are hoping the government will change its economic policy following the thaw in relations.
We've always managed to progress with or without the US trade embargo. We work to live and we'll continue on. We'll see what happens going forward.
Nearly half of Cuba's energy needs are covered by a preferential oil deal with Venezuela, but it is now short of more than 50,000 barrels a day. Venezuela's financial crisis and drop in crude oil output have left it unable to cater to its South American allies' needs. The lack of supply means Cuba's economy is suffering, with little or no surplus oil to export.
All right, finally, a story for you from China, where, Stephen, it appears there's been a surge in complaints over online shopping. What's going on? People getting more moany, or there are more real problems going on?
Perhaps a little bit of both. Chinese consumers made almost 150,000 official complaints about online shopping last year. That figure is up by 87%. Now, the complaints focused on things like substandard quality of goods, counterfeits, delayed shipments, and products not matching their description online. Chinese authorities say the rise in complaints is partly down, though, to better knowledge of consumer rights. This could come back as something of a little embarrassing for China's e-commerce titan Jack Ma, though. He, of course, the founder of Alibaba. His philosophy, or he once argued that fake products were of better quality and price than the real names in China. So he may have to eat his words after some of those complaints.
Yes, just a little bit. Thanks very much. Stephen Carroll, our business editor there. Back in round about an hour's time with more headlines for you.